Hi everybody, this is Gary Dean and this is our free weekly video report for Thursday, January 14th, 2016. I want to start off with saying if you guys got a lot of emails yesterday, I apologize for that. We had a lot of things going on and I know some people got duplicate emails. I apologize. That's not what we normally do. It was just kind of a crazy day. So with that, let's get started. I have a feeling that some of the information I'm going to give you today is going to be tradable information, and you're going to get an idea of how things work. And if anybody was able to see the webinar yesterday, you got a very good feel for how, Woody views the markets and what he does. And it was a fantastic webinar that went on, very interactive, a lot of questions, and I think it was a success. So we're going to try to do that once a month. But anyway, let's get started. So at Sentiment Timing, we believe that human beings in the markets are irrational. There's always going to be an irrational element at work, and that is what creates market opportunities. Now, we find these irrational elements through Woody Dorsey's proprietary sentiment database, as well as his technical timing tools that predict when the market is going to reverse, and then we use our regular technical analysis to figure out where. And that is our market timing matrix. Time is the technical timing indicators that let us know when to start looking for a reversal. Sentiment is letting us know how traders are feeling about the current trend. And if you've heard that, the old saying that when too many people jump on one side of the boat's going to tip. Same thing goes with sentiment. When there's too many people that are extremely bullish or bearish on the markets, typically the market does a reversal, and it has to be interpreted, and that's what Woody does. So it doesn't mean once you get an extreme bullish or bearish reading that the market has to turn. You want them to match up with the time aspect as well as the price. So I left you, I meant the last report, I don't even remember what I did because we had the holidays and everything going on, but on December 22nd, Woody was looking for we were looking for strength into December 24th, and then from there for decline to go into the 5th. That was changed to the 8th to the 10th after we saw things take out the 0% bullish reading on the 21st. So that gave us a heads up that it was going further. On the 24th, we had a 91% bullish reading. So we were looking for strength into the 24th. We got the 91% bullish reading. Remember, when everybody is on one side of the ship, it typically turns. It was running into our time period to expect a reversal. And as you know, we got a little pop-up on the 29th, and from there we've been going straight down. We've had the worst start of a year in history. And, right now, is it time to panic? And I don't think it is, which we are going to be showing you. So remember, the 91% bullish reading, that was your euphoria there. Right now, we are in the capitulation rate things right here, and I'll show you with our sentiment data that I am going to pull up right now. Hang on one second. Okay, so here's our sentiment data, and this is from Tuesday. You can see 4%. 1%, 2%. Yesterday, the data didn't come out, but Woody believes it's going to be a 0%. We're putting our report out shortly. So everybody is bearish on the markets. Now, this is our intermediate term sentiment. You can see that is at extreme, very, very bearish levels. We are looking for some type of turn to come out of the 10th. Obviously, things went a little bit low. It extended a little bit lower, but that's because the market has changed, and that is what Woody has been telling everybody, is that nobody really realizes that this market is not the same market that it's been. It's no longer just buy the dips. It is now selling the rally. So these moves are going to be very sharp to the upside, but they're going to be very quick. So we could last into the 22nd of January, some upside on it with the sentiment at extremes. It's lining up. So if we take a look at our regular charts, and on the technical basis, you can see here's support right here, and every time we are here, we've had massive rallies. Are we going to get that? No, because remember, the market has changed. But Can we get a rally all the way back up to these levels here? There's some open gaps. So yes, there is a chance. Is there a chance that we can go lower first? Absolutely, because if you look, we don't have any bullish divergences in place yet. So we could see a bounce and then back down again to test these lows. That would make sense. But if we look at a 60-minute chart, this is the support area for the S&P. We do have bullish divergences, so expecting some kind of rally. If you're short right here, you're begging for pain, because everybody, as I showed you, everybody's bearish on this market right now. We're in a support area, and we also, if we look on a daily, we're very, very overextended, and we are at areas where we've seen big bounces. So I would not be pressing the short side. Even if we do head lower again, it doesn't, you're still asking for trouble. So wave count 1, 2, 3, 4, 5. It makes sense now that we had it. So this is just from this level here. So what we want to do is take a look, and I have to exchange these because this is from last night. You could expect that this is, since we have the 5 waves down, we have very low sentiment. A typical retracement is going to go to 50 to 78%. So you're looking at a move that could take the S&P all the way up to 2038 and still be bearish. And if you look, here's your 1, 2, 3, 4, 5. So this is your last 5 right here. And if I just go to a 5-minute chart, 1, 2, 3, 4, 5. I mentioned this last night in my Markets Path video that if we made another low, this could be the low before we got the rally. And believe it or not, I had no idea that the S&P was up 25. It was down 3 when I was typing this. But in any case, this is what happens. So don't be surprised. Obviously the bulls are going to have to get through this 1955. If they do that, don't count out 1980, 2038, 2203. Everybody is bearish on this market. These short covering rallies go very, very fast, and like I said, when it sticks, the first obstacle right now, get it through this 1925. If they do that, then the next obstacle is going to be 1955, and then from there we're going to probably start closing some gaps. So with that, that's all I have for tonight. And again, that is how we read the markets. It's if you want to be trading with confidence on a secret type of model that nobody really knows because nobody tracks sentiment, and for somebody that's been in this market for over 40 years and one of the best market timers, we are offering a 50% off the first month, $74.99. This is the coupon code on it. You can see that right above. But again, we're only taking a certain amount of these, and we already have a bunch of them filled from the webinar. So if you're interested, you definitely want to be following this sentiment, because when this is when major turns come. And also, if you do subscribe, we are giving you a free membership to marketspath.com. That is just where I do nightly video reports. It has nothing to do with sentiment timing, but a little bit more on a technical basis. So until next week, enjoy trading and have a great day.